Now, I want to understand that this easy strategy is in 4 steps. The first step is simply, number 1, identifying directions and key levels. Number 2, identifying market structure and supply and demand zone. Number 3, identifying point of interest and liquidity. Number 4 is simply identifying entries and confirmation. Now, these 4 steps are categorized into 2. That means in these 4 steps, it is categorized into 2. And the first category is simply the category that tells us where price is going to. That means this first 2 steps here is simply a category that tells us where price is going to. And this 3 and 4, or the second category, is simply the one that tells us how price is going to that point and how we can join price to go to where price is going to. Let me recap again that in these 4 steps, the first 2 is simply telling us where price is going to. That means it's telling us direction that price is going to. Whereas this 3 and 4 is simply telling us how we can join price to go to that direction that price is going to. I'm going to explain these steps in this video. But before we go into that, if you're seeing me for the very first time, my name is Divine and I'm a Forex trader. What I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to see content like this, I want you to smash the subscribe button, like this video and drop a comment. Now, let's look at the first step here. I want you to observe something in these steps, that at every step, you are doing 2 things. For example, the first step, you're simply identifying direction and key level. Second step, you're simply identifying market structure and supply and demand zones. Third step, you're simply identifying POI and liquidity. And the last step is simply your entries and your confirmations. At every step, you're looking for 2 things. Now, depending on your kind of trading or the kind of person that you are, each steps have a time frame. And I'm going to be giving you, based on my own personal preference, to time frame that I always use to identify these 4 steps. Because no matter who you are, whatever what you do, you look for this in the market and you have your own time frame. Some persons might choose to identify directions on the 1 minute time frame. Some persons might choose to identify market structure on the 2 minute time frame. Some might choose time frames is a preference to your kind of trading. But because I'm a day trader and a swing trader, I'm going to be showing you the steps that I use to implement these steps, or time frame that I use to implement these steps. Let's start with number 1, which is simply identifying directions and key levels. Now, for you to be able to identify directions and key levels, you simply want to understand how to identify directions and how to identify key levels. And whenever you come to the markets can only be in three directions. That means market can simply be going in 3 directions. Is that price is going to the upside, swing high, swing low, swing high, swing low, which is an uptrend, or price is going to the downside, which is swing high, swing low, swing high, swing low, downtrend, or price is basically resting. Now, in the markets, whenever you open the chart, is that price is doing any of these 3 things? And it's your duty to be able to identify directions and know if price is going to the upside, downside, or price is resting. And now, how do you identify if price is going to the upside, going to the downside, or price is resting? You simply use support and resistance. In this case here, I won't go into the chart in this video. I want to theoretically explain this step for you so that in my next video, you're able to understand how to implement or use this step or template to identify these things on the chart. Now, for you to be able to identify if price is going to the upside or downside, you want to simply use what? Support and resistance. And in this case here is basically our what? Support. And here's basically our what? resistance, meaning price is in an uptrend. And you cannot use your eye to tell if price is going to the upside or price is going to the downside. You want to simply use support and resistance to know if price is going to the upside or price is going to the downside. Now, if price is going to the downside, the same thing, resistance, support. Price is going to the what? Downside. Now, if price is resting, same thing, resistance, support. Price is basically resting from this point of support to this point of resistance. So your ability to identify direction is your ability to use support and resistance to identify where price is coming from and where price is going to. Now, having identified or having known how to identify this direction, you want to simply identify key levels. And key levels are simply the last point where price made a direction from on a particular support level or a particular resistance level. In this case here, this is the point of what resist. This is the point of key level, and this is the point of key level. That means in this uptrend, this is the key level, and this is the key level. In this particular point here, this is the key level, and this is the key level. In this point here, this is the key level, and this is the key level. So you have to identify direction and identify key level for you to be able to go into the next one step, which is identifying market structure and supply and demand zones. Now I'm going to clean this place for me to be able to use this example here. Let me use this uptrend here to be able to show you how to identify market structure and supply and demand zone. First of all, what is market structure? Market structure is simply what tells us how price is moving to direction that price is moving to. How is price moving? Remember, support and resistance told us where price is going to, and this one is telling us how price is going to that place that this one is telling us. Right? Now, I don't want it to be very complex and long. I'm going to possibly just show you the theoretical aspects, and in my next video, I'm going to comprehensively show you the practical step by step in my next video. But I want you to like this video, subscribe, and drop a comment if you have any question to ask. Right? Now, let's look at how to identify market structure. For us to be able to identify market structure, we want to simply identify what are the contents that makes up market structure. That means if you hear market structure, what are the components, what are the structure, or what are the features that make up a market structure? Now, for us to know the features that make up market structure, we want to simply understand that every market structure have a swing high and a swing low, right? Every market structure have a thing of character and a break of structure. So these are the 4 things that make up a market structure. Now, for us to be able to identify market structure from this key level to this key level, but in this, because once we've identified this key level here, like key level, this is what I'm simply showing here, price is going to the upside, right? I've identified this key level here and this key level here. We want to simply identify market structure by simply identifying those features that are present in the market structure. And in this case here, price is going to the upside, and this is the market structure that price is creating. A swing low, a swing high, a swing low, a swing high, a swing low, a swing high, a swing low, right? This is referred to as a market structure. Remember I said that for every market structure, there's a swing high and there's a swing low. There's a break of structure and there's a change of character. This is referred to as break of structure, break of structure, break of structure. And if price simply take out this low here, it refers to as a change of character. Now, remember our goal here is to simply identify market structure and supply and demand zones. Now, between this low here and this high here, there's always a supply or demand zones that appear at this point that buyers are going to buy from or sellers are willing to sell from. And this supply and demand zone can appear in four kinds. That means there are basically 4 types of supply and demand zone where price gives us a rally-based rally, a drop-based drop, drop-based rally, and rally-based drop. These are the 4 kinds of supply and demand zone that we can simply identify from this last low to this last high here. Are you following me? Now, having known how to identify market structure, let's look at how to identify supply and demand zone. I just told you that for you to be able to identify supply and demand zone, our focus has to change from this particular full market structure to the last swing low and last swing high that was created. That means if this is the last swing low and this is the last swing high here, price is basically going to be moving like this: a rally, a base, a rally, right? A rally, a base, a rally. This point are simply referred as demand zone. demand zone. We want to simply wait for price to come into this zone and then we'll buy, or wait for price to come into this zone and then we'll buy because price is in an uptrend. That's basically how to identify what supply and demand zone. Now we have point of interest. A point of interest is simply a refined supply or demand zone. Now, when you identify a supply demand zone, it's always very big and bulky that you want to have almost 50 pips at a particular supply or demand zone. Your ability to go to the 1 hour time frame and refine these 50 pips or 80 pips to become 20 pips or 30 pips is simply refining to become a POI. And there's a way to do it. One of the ways to identify or refine a supply zone is to simply represent the supply zone with a specific candlestick, which can be a dodgy candlestick, a shooting star, or a pin bar. It can be any of these candlesticks that are very, very active in the market. And most likely, it's simply going to be a pin bar, a dodgy candlestick, or shooting star. Any of this particular candlestick. You want to simply use any of this candlestick to represent your POI. For example, let's assume we find this place now and it's now a POI. This place is simply showing us a dodgy candlestick here, and we are waiting for price to come back to this zone so we can buy, right? For us to buy, there has to be liquidity that will make this place to hold. That means even if you see a POI and you see a supply zone or demand zone and you want to simply sell or buy, everything is okay for you. You want to simply identify liquidity at that zone for you to be able to know that this place is going to hold or not. And in this case, liquidity is very, very broad and it can be of two types. A trend liquidity, equal high and equal low, or extreme low. These are basically what makes up a liquidity. That if price induces liquidity at this point here, then chances are that this place is likely going to hold for you to buy. And you want to simply have a practical liquidity and then you buy. Now, even if you have identified this POI and identified this liquidity here, you have to be able to have an entry point and most importantly, a confirmation point for you to buy from this point here. Now, even if everything is beautiful, everything is fine, POI is okay, liquidity is there, everything is very okay for you, you have to simply wait for entry point and confirmation point for you to be able to buy from this particular point that you want to buy from. And in this case here, we have only two types of entries, where price simply gives us an aggressive entry or price gives us a confirmation entry. And this confirmation entry can either be a change of character or a sniper entry where you don't have to wait, just allow price to go to that zone and then simply buy by taking aggressive risk. In this case here, we're only looking for change of character in this particular POI here. This is our POI, remember? This is our POI. I want to simply see price give us a change of character at this point here, and then we'll buy. This is our stop loss at the right place here. Now, this is basically a theoretical aspect of how to be able to use this strategy to make money in 2025. In my next video, I'm going to simply go into practical aspects or practical aspect on the chart to show you how to impute all of these things on the chart. I'd like you to subscribe, like, and share. I will see you in the next video.